Metal stocks are the top losers in a weak market. Metal prices decline overnight amid global worries of a banking crisis. All metal stocks down anywhere between 2.5% to 4%.
Oil marketing companies like BPCL, HPCL, IOC gain as Brent crude prices dip below $74 per barrel. Prices are at the lowest in 15 months.
Another stock which is seeing a big cut is Samvardhana Motherson, loses over 10% after 23.2 crore shares, which is about 4% equity, changes hands via block deal. Sources tell CNBC-TV18 that Sumitomo wiring systems have been the likely sellers.
And Titan is among the top Nifty gainers today after Abu Dhabi Investment Authority invests $500 million in Lenskart. Street expects the Lenskart deal could provide valuation reference for Titan's eye care business.
Patanjali Foods down almost 5% after exchanges freeze promoter shares on non-compliance of minimum public shareholding norms. Management tells CNBC-TV18 it is confident of achieving mandatory MPS within the next few months.
Hello and welcome to Chartbusters. I'm Ekta Patra. With me is Mangalam Malu. Well, it's turning out to be a session where we're definitely seeing some amount of volatility coming in, considering the trepidations that we're seeing in the global banking space. But nonetheless, we have recovered from the day's low of around 16,850. But the moot point is that the Bank Nifty slipped below 39,000. We have the Nifty, which is trading below 17,000 as well. Let's see whether there is any kind of formidable buying and sustainable buying at lower levels. As of now, it's definitely weak and volatile. Hi, Mangalam.
Hi, Ekta. It is weak and volatile, but the only bunch of stocks which are gaining today are the defensives. Yesterday, we saw some purchase come by in the pharmaceutical space. Today, the FMCG pack is seeing some purchase. Let's also get you a few ideas of profit coming in from our colleagues at Money Control Pro. Nitin Agarwal joins in.
Hello. The company that I have chosen is Bosch, an auto ancillary company. There are multiple factors that make us bullish on this stock. On the back of strong product portfolio and wide product range, Bosch enjoys a leadership position. It has around 75% market share in diesel injection system. Secondly, the Bosch has continuously been investing in technological innovation and has led the company to attain the technological leadership among the auto ancillary companies. In fact, it is one of the rare companies which has bargaining power with auto OEMs. And in light of the upcoming opportunities in digital solution, advanced electronic system capabilities, and electrification of vehicles, the company will continue to add new components in its portfolio. All these provide new growth drivers for the company. Thirdly, the industry outlook is very encouraging for the Bosch. The fortunes of Bosch are directly linked with the commercial vehicle segment, and the medium to long-term outlook for the segment is very promising with the pickup in the economic activity post the pandemic. Further, a positive farm sentiments on the back of the higher crop production is expected to add to the demand. The company sees a significant demand growth in the bus segment, which had been hobbled by the pandemic, and now with the opening of the colleges, schools, and offices, the company is witnessing a significant demand there. Lastly, marred by the severe shortage of semiconductor chips and significant price increase in the raw material, the stock price has corrected significantly, making the valuations very attractive. The company currently trades at around 28.4 times FY24 projected earnings, which we believe is very reasonable for a company like this.
Okay, all right. Thanks very much for that. Well, for the markets, it's definitely weak. We have the Bank Nifty, which is down around 0.4%. But do watch out for a lot of the steel stocks, which are the top losers on the Nifty. Hindalco, Tata Steel, JSW Steel would be case in point. Time for a short break, but we'll get you more on the markets. A lot of stock-specific action today. Stay tuned.
Well, we are seeing some recovery from the lows in a couple of these mid-cap names. Cement stocks, for instance, Ambuja Cement has moved higher. We have United Spirits, which has moved to the high point of trade as well. And Alembic Pharma from the broader markets has seen a big move, most of that coming by in just the last few odd minutes. One stock which is in focus is Jubilant Foodworks, because they've made announcements with regards to expansion of their Popeye brand, which the street cites as an optionality of growth for the company going forward. I spoke to their recently appointed global CEO, Joshua Kobza of Restaurant Brands International, and Samir Khetarpal of Jubilant Foodworks, and began by asking them about their plan for Popeyes as it completes a year in India. Listen in.
We are very excited about the response that we have received from our customers, the repeat rates that we have seen, and the satisfaction on food level. They're coming back and asking for more we are ready to expand. I think that's kind of the big announcement. We'll add we will get to 50 stores in 1 year and 250 in the medium term. So super excited about the journey.
Joshua, you know, it's your first international trip after you took over as CEO. That means that you have some targets for India as well. What are your internal targets for how big India could be for you?
I think Samir laid out the numbers really well. I would just tell you, I'm personally very excited for Popeyes all around the world, but particularly in India. That's why I made it kind of my first international trip, because I think it's one of the biggest priorities for us all around the world.
So, you know, we've seen the chicken sandwich market grow faster than all other categories of quick service restaurants globally. Samir, what has your prognosis for India said? How big a market can it be? And what are the expected growth rates here?
So I think the market is huge. It is the QSR industry as a whole is poised to grow 9 to 10%. My own estimate is the chicken as a space will grow faster than that.
And if I can just add on the chicken sandwich, if you go back a few years in the United States first and then around the world, we launched the now famous Popeyes chicken sandwich, which was a tremendous success. Some people said we blew up the internet, but we also sold a lot of chicken sandwiches, and I think that had a really powerful impact on the whole sector in that we really upgraded what people expected from a chicken sandwich. We've now taken the famous Popeyes chicken sandwich all over the globe, and I think that's really driving a lot of growth across the category, and we'll expect to do the same here in India.
What is it that Popeyes has for it to have a right to win out here? Yes, it is the Louisiana flavor, etc., that everyone talks about. I'm a vegetarian, so I have no take on this personally. But, you know, how is it that you will make Indians have some of your products?
No, I think great question, and I think that's always the endeavor. And I'm delighted that at Jubilant I have a team of great chefs, food technologists, and we've kind of in our new office we have a dedicated room of a floor dedicated to kitchens across brands, and along with very strong consumer research lab. So we are firstly constantly learning and innovating for our customers. More importantly, I think for specifically for Popeyes rather, I think inherently the bold flavors of Louisiana work very well with Indian palate.
Right. You know, Josh, just to follow up on that itself, the Indian market not particularly easy currently, primarily because in the chicken space itself, you have the incumbent large global QSR chains as well. You have, you know, KFC at the same time. McDonald's has ramped up its chicken sandwich offering, of course, on account of the fact that you guys have made that entry as well. But at scale, those guys, you know, are very well versed with India. Indians are well versed with those brands. In that, how do you make Popeye relevant to the average Indian?
Yeah, it's a great question. And, you know, as we look all around the world, we've been able to compete very effectively versus a number of different competitors in the industry, whether that's in the United States, where we've been able to take a lot of market share, or in so many new countries around the world that we've gone to and entered very successfully. I think the key ingredients are the same, both in our recipe and in our success. And it's the great products and incredible service that we provide that allows us to be really effective in the marketplace. And as I said a little bit ago, I think the other really important key for us is to work with local partners that help us to figure out how to adapt and how to be really effective in the marketplace. And there's none better than Jubilant. They're an incredibly talented team, very experienced. They also have the scale in the market, so they can help us a lot on the supply chain, on things like technology. That's allowed us to bring a very digital-first approach to the market, and I think that's what's going to allow us to compete effectively here.
What will it be? New cities penetrating in the south itself? What sort of regional trends have you noticed so far? I mean, currently you're prevalent only in the southern markets.
I have ramped up my real estate team by 3x in the last 6 months, Mangalam. They're all over, and I don't allow them to come to our office because I want them to go get me the best properties across India. So we're going to expand. We are not going to be we are more supply constrained than demand constrained, if I can use that analogy.
And final question then, this is on the overall business for you, Samir. Just wanted to understand, how has consumer sentiment been so far? Have we seen a pickup after festive season? There was a lull. A lot of people were talking about inflation hitting them. Now with the kind of commissaries you've built, the lower end that you're targeting, how has demand been?
Yeah, I think India is always a value-conscious market, and Mangalam, we are grown like that, we are trained like that, or wired like that. But yeah, I think the inflation has not come down to the extent that I would have liked personally. It continues to be high, and consumers continue to make choice in favor of entry-level or lower-priced products, and that's why we launched the 49 rupee range as part of Domino's. So I do see some bit of volumetric uptake, but consumers are very conscious of how much they are spending while eating out.
Okay, interesting conversation there for Popeyes, which has completed 1 year in India. I just want to point out that there has been some amount of a recovery which has taken place just in the past couple of minutes for the markets. So the Nifty has managed to climb back up towards 17,000, just about maintaining those levels. And the Bank Nifty has retraced back to 39,000 as well. So there is some amount of buying which is coming in at lower levels. Time for a short break. We'll get you more on the markets, a lot of stocks on the other side. Stay tuned. Welcome back. Well, for the markets, we've been pointing out that it is definitely a volatile session within a tight range, you'd have to say at this point in time. Just want to point out a couple of stocks which have managed to do well on a week-to-date basis. We are on Thursday, so just a couple of movers through the week have been a couple of the Adani stocks. So, for example, Adani Green is up around 14% this week. It's up 5% today as well. We have even Adani Transmission, which has not done too badly. So, it's a bit of a bounce back for that one on a week-to-date basis. It's gained around 6% Yes, you have to put the fall into context because it's fallen still over 60% on a year-to-date basis, but it's up around 3.5% today. Just watch out for a couple of these consumer or direct consumer related stocks such as PVR, which is up around 0.8%, Metropolis, which is up around 0.3%. Both these stocks have gained over 2% on a week to date basis. So there's some amount of buying probably coming in to a couple of these individual stories. But another individual story to talk about is definitely Titan. Mangalam, there's been a lot of news with regards to Lenskart and the valuations that they're probably getting. What's the rub-off?
Well, the biggest rub-off is that it gives a reference point for Titan's eye care business. I mean, up until now, everyone would look at Titan as the jewelry business, the watch business. Most of it, of course, value was derived by the jewelry business. Increasingly, some of the analysts started ascribing some value to a Carrot Lane investment as well. But now that this deal has happened and the valuation at which this deal has happened really, begets the question, should people be starting to value the Titan's eye care business as well? ADIA investing $500 million in Lenskart for a valuation of $4.2 billion implies that, the company's sold, or rather is valued at around 17 times FY23 price to sales. The numbers that we have already is that Lenskart did revenues of over 1,500 crores in FY22, which was a 66% jump, understandably, because the digital businesses did extremely well during the COVID times. They still were loss-making to the tune of 100 odd crores. Could analysts start using these metrics and ascribe value to Titan's eye care business? Where does that number stand at right now? For the first 9 months of this year, the eyewear business of Titan has done revenues of 524 crores with an EBIT of 96 crores. They've guided for a 40% jump in this year itself. So that is roughly 750 crores. On that, if it grows to around 1,000 crores by FY24, and we don't give it the expansive multiples like 17 times, we look at it in a more conservative manner, anywhere between 6 to 12 times, the value that Titan's eye care business could be worth anywhere between 6,000 to 12,000 odd crores.
Okay, 6,000 to 12,000 odd crores is the valuation metric that we could possibly be working with. That's on Titan. Thanks, Mangalam, for that. Well, Vivek now joins in. He has Samvardhan Madison on his radar. Vivek, tell us more.
Well, that's right. So last evening, we had access to the term sheet as far as this particular large block deal was concerned in Samvardhana Motherson. We had reported that the Japanese promoter entity Sumitomo Wiring Systems was likely to sell stake via the block deal. Along expected lines, today morning in the block deal window, you saw almost 3.7% of the total equity change hands, and this happened in that particular window like we mentioned. Now, the floor price for this particular block deal was at 69.9 rupees a share, so the total deal size was close to $195 million. Now, remember, Sumitomo Wiring System held almost 17.55% stake in the company at the end of the December quarter. Now, according to the term sheet, there has been a commitment from Sumitomo Wiring saying that they wouldn't be looking to sell further stake for 180 days. But however, given the fact that the promoter entity is selling, and this comes on the back of the fact that you also saw Sojitz Corporation sell a significant chunk of their holding in the past, there continues to remain the overhang of further supply as far as Samvardhana Motherson is concerned, and that too is leading to a significant pressure as far as this stock is concerned.
All right, Vivek, thanks a lot for that. Meanwhile, just keep an eye out on a bunch of stocks. While the Nifty has managed to move into the green, it's been shuffling between green and red. The good part is that it hasn't seen a big sell-off. But then again, the second half is extremely important, mainly because when the European markets open, thereafter we see a bit of an impact on our markets as well thereafter. A bunch of stocks which are calling for our attention. We have Transport Corp. We had the management join in yesterday. That stock's up around 6%. Ethos is the other one, which is rallied about 8% from lows, currently sitting closer to the high point. They've opened their store in Madhya Pradesh. Sapphire Foods, however, on the other hand, is down by about 5%. Varun Beverages is the one which is down around 4.2% as well. Street concerned about demand this summer. At the same time, some sort of valuation concerns too. So we'll keep an eye out on individual stocks even as the market recovers from lows. Let's see whether it sustains there or not. Earlier, we spoke with James Sullivan, MD for Asia Pacific Equity Research, and this is what he had to say regarding the US banking crisis and the Indian banking systems. US banking crisis, remember, was the reason for the big global weakness right now.
Focusing on more domestic demand, domestically oriented investments in markets like India, China, and domestic stories makes a tremendous degree of sense for us. If we look at the broader banking system as a whole, again, it's important to differentiate idiosyncratic risks from broader systemic risks. We are not currently seeing systemic risks to the global financial system, and so we're not necessarily sounding alarm bells from that perspective. We had gone neutral on the Indian market on the expectation that you'd see a pause in market performance given the fact that most investors were already exposed to the market. What we saw late last year, earlier this year, was a very significant country rotation trade out of India into China. We still see what we would argue are potentially the last vestiges of that today. A number of investors are still playing a China reopening trade. In addition to that, you have an SOE restructuring trade ongoing in China today, where the regulatory environment is moving away from an EPS growth forecast and towards an ROE forecast. And you're seeing significant outperformance of safer dividend yield plays like the China Telecom stocks at this stage. And so that's offering an alternative. From a medium-term perspective, we still do see very interesting prospects for India. If we look at the banking system in India, we are still positive. We have been for some time. The recent weakness offers potentially a medium-term buying opportunity. Domestic demand, particularly in the domestic consumption stocks, looks very interesting. And select CapEx plays off the back of corporate spending. One of the things that we got out of the Indian budget is that the infrastructure spending is there. It's not necessarily higher than expectations, however. So that is an incremental driver of infrastructure stocks, is potentially a little bit more limited than what we would have liked to see.
Okay, well, that's some opinion, global opinion with regards to what's taking place globally at this point in time. But there is definitely a recovery which is taking place for our market. So we're going to take that with both hands. The Nifty is above 17,000 at this point in time, and the Bank Nifty, which is cruising above 39,000. Let's see whether that sustains or not. It's a wrap on Chartbusters. Stay tuned. Trading hour up next.